there were a lot of questions about gold today, and we have a perfect guest for it. So, James, welcome back to Face. How are you?
Hey Dale, how you doing? How's my sound?
Sound is good. Could do a concert with that sound.
Yeah,
So, are you going to show anything on your screen, James?
yeah, if I can share it, let me see here. One sec.
Okay.
Yeah,
So, so while you're doing it, James is completely immersed in precious metals and the cash and advising people on, timing somewhat, but more about the principles of sound money. So, James, I'm not seeing anything yet
yeah, I got
on your
you.
screen. Okay, so
Can you
here's a
see me
couple of
now?
things. Yeah, here's a couple of things you want to
Great.
talk about. Let,
Yeah,
let me open it up with the news out of the G7 about,
sure.
what's your view on the ban of Russian gold sales?
It's I think what they admit publicly that it's more just an expression of political,
Okay.
solidarity, I suppose, between the people who are aghast by the invasion of Ukraine, and they're trying to show a willed front against Russia. But Germany's there, and I'm not sure Germany is as stout and as willing to put up such a show. But in the end,
Yeah.
the gold it's more or less symbolic. Gold can flow and move. It's like oil. It's the same as oil market in the sense that once you go around trying to push down on it, it flows out somewhere else. And it's kind of like that. If you've ever been to a carnival and you try and beat that game with
Oh,
the little thing.
whack-a-mole.
Yeah, it's a whack-a-mole. It's
Yeah.
essentially a game of whack-a-mole. And if you're talking about perhaps the most opaque but universal market in the world. The amount of smuggling that goes on and chicanery that goes on, if governments try and get in the way, or if they try and tax it, et cetera, it always finds its way. Russia is on the cusp. Within the next year or two, it's going to be the largest gold miner in the world. And that's going to be regular for like decades because
Well,
Siberia has a lot more gold than I think most people realize. And they are going to be mining that area for a long time. So Russia's
lots of
going to
free labor too, right?
have, I think
Huh?
so. I mean, that's
So
where
their
a lot.
production cost is zero.
Yeah,
Well,
I
no,
mean,
they have equipment and energy to run it. Yeah.
sure, but they don't have a lot of the ESG type of
Yeah.
stuff that gets pushed on other large gold miners, and it's just a situation where Russia is if the Pentagon for decades had always said what we don't want to do is push Russia into China's arms so they become bosom buddies. Well, that's
Here we
exactly.
are.
Yeah. So I think that
Yeah.
is that the new policy is it try and get Russia and China to become buddies and get more interlinked.
Yeah.
So yeah, so that's what's happening, and it's Russia and the BRICS are already working on a whole bunch of things in terms of coordinating together. They're trying to come up with various solutions to try and to
Outside of
be
Swift.
yeah, outside of SWIFT. That's the whole point. Everybody saw
Yeah.
Russia get their U.S. dollar denominated savings more or less canceled. So every central bank in the world saw that, and that's dollar negative long term. You're going to have more central banks buying gold, especially the emerging market countries in the east for sure are going to be buying more gold. So that's fine. The more they do this, the more it's going to push people toward that system in a multipolar world.
Is that the name of your show, James? Gold Rush? One of our attendees is asking that.
Yeah, I was in it. It was a show, the Gold Rush. I'm trying to remember. Maybe they saw that. I'm not sure. I was in a show on
Okay.
History Channel H2, and it was about it was one of those silly conspiracy shows.
Oh,
Maybe you saw that on
did
my
you get a Hollywood movie offer after that?
no, but I did get my friends from school to see me. I actually have a professional job and actually use my degree. So
Did they want autographed pictures?
yeah. I mean,
Yeah.
at least it shows that I have
Anyway, you also
a
have a very a podcast that I didn't know about, and you have a lot of people paying attention to what you're
yeah.
saying. So, what are you telling people on your podcast right now? So, gold's been under a little pressure. Um, it's not breaking out. It's not
All right,
breaking down. It's
gold and silver have certainly been a disappointment recently, especially for people who look around and see the inflation numbers and wonder what the hell's going on and why isn't gold going through the roof.
what's
Yeah,
your theory? Why?
uh, I think we still have something upcoming that's going to be deflationary. I think at some point the Federal Reserve will do what it's
Too
trying to do,
much?
which is essentially break the markets, and then they'll be able to pivot and reverse course. But once that pivot starts to occur, I would expect some inflows, and you're going to start seeing, I think, bigger money come into the derivatives all the way down the market.
So what are they going to do? They're going to ring a bell and say, "Okay, it's okay, we're through," and that's the
Well,
day
the
you
Fed
buy
is
gold.
they're already sending out signals like, well, we don't necessarily have to wind down our balance sheet by too much. 2 or 3 trillion is enough. If they try to do that, if they try and take
Yeah.
3 trillion off their balance sheet, something's going to break. Because
Okay.
we're already on the cusp of things breaking in the market. So it's been an orderly decline, which is what they want, and what you eventually see is disorder, and then they have to pivot because the disorder's here, and they have to ease the market and ease calm and ease fear, because it can go waterfall decline, especially the way that the stock market is set up with passive flows. That can get real ugly real quick. So
Okay.
yeah, and then,
My thesis is, and tell me if you agree with it, is everyone's going, it's been a lousy inflation hedge, and maybe that's because it's a monetary hedge, and bear market in the dollar hasn't begun yet.
correct. That's true. I mean, think about the dollar's been pretty strong for the last, 7 years almost.
Yeah.
I mean,
Yeah.
the DXY was trading around a little lower than these levels in 2015, and now it's still around those levels, a little higher. And gold is, in that time, more or less doubled
Yeah.
each of those years. So the DXY is a nice signal, I think, for people who are day trading, short-term trading, even medium term. It's not a bad signal for gold because there's a lot of flows that happen because of that. But in the long term, it comes down to the choice of what are you going to do? Are you going to devalue the currency, or are you going to, ultimately that's where gold makes its move once people really start losing confidence in currencies, and that's working slowly but surely. And in time, I think they're going to realize that this is a secular inflationary regime, and that's been the policy since August 2019's Go Direct meeting in Jackson Hole, Wyoming. I mean, you go back and look at the.
Oh, go ahead.
Yeah, you go back and look at the Fred M2 chart since August 2019, when the Bank of Japan, the Bank of England, Federal Reserve, and the European Central Bank all agreed that going direct, meaning to directly finance a lot of things and give money directly to people, essentially, to force helicopter money on the market. And by doing that, they can force secular inflation to resume and to come back, because for the last 2 decades, it's supposedly been not too inflationary and disinflationary, whereas now it's a different day. It's a different era. And the Fred M2 chart's up 46% since then. That's the M2, right? I mean, it's going to have ramifications far in the future, not just now with CPI supposedly 8.6, but it just shows that that's what they want. They want inflation come hell or high water, and they're going to get it.
Okay, is the gold silver ratio telling you with the recent little failing rally up there in gold silver? You think silver
I was looking
will
at that.
outperform?
I still think it's going to go to the 90s, and it may even go to 100. Make like a U shape and test that area. Ultimately, gold, I think, is going to lead us out of this.
Okay.
Silver is going to do some catch up later, but the gold silver ratio, I think, could go even higher still, the way it's trending.
Okay.
If you have a little bit of weakness, like silver's just been extremely weak, and it's been trading around 21 for a long time now, and dipped below 21 late last week. So it's possible to see it dip again toward 20 and test that.
What would change your mind that silver was acting better? Closes back over 22, 23, something like that?
You need to see a rally beyond 23 and close a week beyond 23 for a rally. It needs to get up well above 22, I think, before you can really start moving into it as a momentum trade. Okay,
so you brought a couple of charts. I think you were showing in yen terms how well gold performed.
Yeah. It just shows you they're the most advanced in terms of doing QE. They started in 2001, and now they own more than half of their entire bond portfolio that's outstanding. You have a situation now where I think this one weekly bar that's way up here on the right,
Yeah.
make this bigger. That's 80. That's about the equivalent of 80 billion in a week buying JGBs to yield control to keep the yield from rising higher than they can't allow. So essentially, you have full fiat monetization. This is more or less the end game of how this goes when you basically buy everything that's not nailed down to keep the system, where you need it policy wise. So long term, the yen could go way, way higher. I'm not sure in the short term. Maybe there'll be a respite and it'll slow down its devaluation, but it's headed for a lot higher levels, and that is a real problem because the yen is a huge currency in the world, and it has a lot of ramifications in Asia for trade. So what you end up having is a situation that could be similar to 97, 98, where you have a currency crisis in Asia kicks off from this. So it's just something to keep an eye on. And it's obviously emergency hour. I mean, the fact that they're doing this much buying of their own JGBs to control the yield, it's a very, it's just not normal. This is obviously next level QE.
All right.
And we have just a long-term chart on
nice
JGBs and gold, or Japanese gold, which is, this is one of the stranger charts, and I've always looked at it. It's always been weird because of the yen carry trade. The fact that you had the 1980 high, it goes so high here.
Yeah.
And then it took forever. Even in 2011, it never got higher, right? In 2011, gold was mostly record prices everywhere in the world except for, in the yen carry trade. The yen strengthened so much it never got back toward its old 1980 high. But now the breakout has happened. This level of support and pressure is finally broken out. So you have a runaway price for gold, and this, I would expect the more they keep doing all this yield curve control, and you're just going to expect a higher price of gold in Japan for the foreseeable future coming.
Okay. So you talked about losing confidence. About 6 months ago, the big argument was, why would anyone want gold compared to Bitcoin? And with a 60% sell-off in Bitcoin, even if there could be another run in Bitcoin, is there a possibility that some of the funds that were in crypto would lose confidence and start flowing into gold?
It's possible, but I mean, if you look at the size of the crypto market, it's a speck.
Not big enough.
And that was more of a talking point for twiddling thumbs and talking about it in terms of Bitcoin being a threat to gold. It's not, but people like to talk about that. Ultimately on the crypto side, you got a situation now where the BIS last week published their annual report, and they dedicated a good bit of that annual report. It's like a 200-page report to their upcoming CBDC systems. They mostly in that report talked about retail CBDC, but what's more important is the wholesale CBDC, which is basically it's the CBDC part of the system that they're creating, where governments will be able to trade directly with one another and settle directly. And so it's an anti-SWIFT mechanism that's being built. And so the BIS is working hand in glove with countries like China and Malaysia and places all around Asia. So they'll be able to trade directly, and you'll have less dollar demand long term if that's the case. So, it goes back to the thesis that just go back and look at the pound sterling, which you said.
Who funds the BIS? Because I know, I was going to get to this Russian default, the first one since 1913. And those loans are to the IMF, right? But the U.S. is the IMF.
Well,
the biggest contributor, right?
Theoretically, the U.S. is the strongest party within the IMF in terms of voting rights and such. But under the statute of the IMF, it's supposed to be in the country with the largest GDP, and that should be China by the end of this decade.
Okay.
And you have a situation too where Christine Lagarde, I think in 2017, she used to be the head of the IMF. On her way out, they had those types of sit-around meetings where they have a whole bunch of lackeys sitting listening to them, and she's talking to one of her colleagues at the IMF and saying that ultimately by 2027 she hopes the IMF is headquartered in Beijing, China. And that's, her long-term hope and her long-term goal. And that was, before she went off um, and I think
and tried to ruin the ECB.
well, yeah, she's running the ECB now, and you have a
Yeah.
situation where I think that's ultimately her long-term goal is to get this situation where China can hopefully, in her mind, be the headquarters for the IMF by 2027. I don't know if she'll get there or not, but I wouldn't put it beyond her. It seems like these people are pretty focused on what they want, and they usually end up getting it. So, the question of the IMF is not as important, I think, as the BIS. The BIS is literally building the system of the next future monetary system, as they call it. And the future monetary system they want is CBDC. And the reason I bring it up is because they're in that report, they talked about the situation in crypto, and you look at Terra and Lunar Coin and all these other coins that have gone almost to zero or to zero. And you have a situation with Tether, which is the third largest cryptocurrency in the entire world. And it's supposed to be a stable coin, but it's broken its buck for various timeframes in the last year or two. And you've had a lot of outflows. I think it's 66 billion now, maybe that's in Tether. But Tether was, I think, and if you look back at charts, you can see it ramped up a wall at the same time that you had this huge bull market in cryptocurrency the last few years. It was a mechanism used to leverage and pump the price and to try and get in the dumb money, and they did. And the dumb money has lost a lot of their money now. So I ultimately think if you have that thing fall apart, you've not seen the bottom of crypto winter. So I'm waiting for Tether to completely fail. And then maybe you could look around and maybe take a couple select bets and speculations on cryptocurrency. But in the end, it's, we're headed to a world with CBDCs, and there'll be some private coins around, but the 20,000 cryptocurrencies that currently exist, I would expect 99% of them will be gone by the time we're in a world of CBDCs.
Okay. And, tell us what that's going to look like for the man on the street.
Man on the street is going to have a problem when it comes to privacy. And so the man on the street is going to, the powers that be are going to have a backdoor into his checking account. And so you have any moves of funds in your checking account. If the IRS wanted to go back and look and make sure that you were, doing your taxes correct, et cetera, they'll be able to tell very quickly if it was regular flows going in and out of your bank account. So privacy is the real issue when it comes to CBDC ultimately. And the taxing authorities, being able to see virtually anything going on within the controlled financial system. And so CBDCs are really ultimately a tool of control. And I think as well a quick way for the monetary authorities to give out, stipends to citizens so they can at least afford food and, some basic energies and stuff like that. So it's going to be a mechanism that's used by giving out those handouts. They'll quickly get people to create the CBDC app on their phone, and, they'll get a quick adoption if they're giving out free money. And so that's going to be regular in the decades upcoming, because we're going to be dealing with inflation for a long time.
When do you think they're going to launch this?
In the United States, FedNow service starts 2023, and I think FedNow service is the backbone of the coming U.S. dollar CBDC. I would expect the CBDC for the U.S. dollar probably by 2024 at some point. They don't have legal authority just yet, but that's, how hard is it to buy off the right congressmen and senators to get that done? It's not expensive. It's very easy. So I'm sure that'll get done within a few years, and probably under an emergency, they'll do it quickly. So they'll be able to, hand out stipends, like I say. But if you look around the world, there's 100 countries representing roughly 95% of the GDP in the world that are working on CBDCs, and in some form or fashion, some level of development. There's already a bunch that exist that are being, I think China's pushing their pilot to a larger size now. And so it's already existing. It's already happening. You have another, it's not a CBDC, but in Brazil, the population is very quick to use. I forget the name of the new program they have for where you're walking around in a market and you just use your phone and you screen shoot a little thing there, and then you pay through your phone very quickly. And people really have adopted it. I think 2/3 of the population uses that over cash. So people are, I know that a lot of Americans don't like the idea of not using cash, and I understand it. And cash will be it'll still exist, but slowly but surely it'll be phased out as time goes on. But cash will be like the last place you can go, and bullion as well, to have a little bit of privacy and some wealth that's very hard to track or trace. And
James, I
so,
saw a video on Twitter, and you never know if it's real or not, but
sure.
showed a long line of Chinese waiting to get to the ATM, and that China, and the point was China was limiting the amount of withdrawals of its citizens from ATMs. Is
Yeah,
that happening there?
there's 5 banks that are in trouble in terms of real estate. They're smaller banks, but there's a couple of worries that it's moving into the larger Chinese banks, and that's the real worry, is that you could have a bank run with one of the major banks at some point. It's possible that that the lockdowns continued on and carried on for the reasons of trying to
Yeah, they didn't have
keep,
the liquidity.
yeah, trying to keep people from running and getting cash out of their bank in too large a size. I think most people in China are very concerned about the real estate market and how badly it's performed the last few years, and a huge amount of their entire banking system's built on the real estate market. So yeah, there's going to be some ugly issue at some point in that banking system, and the question becomes, well, what the hell is the PBOC going to do? Of course, they're going to backstop their largest banks. You wouldn't allow any of their systematically important banks to fail, but the question is, yuan dollar trading at whatever it is right now, maybe 6.8 or something like that. I haven't looked lately, but at some point you would imagine that the yuan has to devalue more versus the dollar. And when that happens, usually it creates real chaos in the financial markets. And so
Yeah.
at some point I would expect in Asia that's going to come and rule and start. It's a potential catalyst for something really bad happening. So it's something to keep your eye on.
Let me ask you anything you could disclose on how you're preparing yourself for a massive change
Well,
that is underway.
so one thing I just real quick, just for we're looking at this huge Japanese gold breakout, and the fact that
Yeah.
gold is leading higher, and if you look at which is always pretty interesting, that the silver price in Japanese yen, silver eventually follows gold, right? And if gold is just going to keep screaming higher and to the right, look at how depressed silver is versus its old high. It needs the 4 multiple just to get back to its 1980 high. So silver is very, very depressed still, and it's a long-term bet. It's not something I'm talking about that's going to happen in the next year or two, but come back 5-10 years from now and you'll have silver at much, much higher prices, probably back up in this level or higher.
Well, are you going to be able to participate in this new regime, currency regime, and still have preserved, is the only way to preserve privacy to just go to precious metals and sock them away, and then when the new system comes, I've heard people say they just want to get out of the U.S. banking system. How do you do that?
Well, I mean, it's been a long time for a lot of people who keep just enough cash to cover their bills and such. In their checking accounts, in their savings account, et cetera. I mean, what is the federal funds rates? What is it now? 1.75 roughly or so. And if you go and look at what they're offering you for a savings account, you might be able to yield somewhere near that if you go to some high risk one. But you have inflation at 8.6 admitted. Inflation's probably in the mid-teens if you actually do a real data dive on how it's going in truth. So, cash is, I guess theoretically it's trash unless there's a major crash in the economy. Then it's nice to have a little bit of cash to buy up things on the cheap. But bullion is the same thing. Bullion typically in those types of situations, spot price will drop and the bullion price will not drop. You'll go and look at the bullion dealers, and what will end up happening is a divergence. It'll be like March 2020 where you have spot and silver going down to, I don't know what the number. Yeah, 12 or so it got to, and yet when you go to look at bullion, everything's still trading in the 20s per ounce. So it's a similar situation will likely occur if that happens. So it's still an asymmetric bet to me. It's a bet where the downside risk is very limited given all the currency creation and the secular inflationary regime we've now entered for this decade and likely into the next. So for me, it's a safe bet in terms of downside risk versus upside potentials, but it's going to take a long time to play out. I mean, this is gold is going to be the final bubble of this entire post World War II debt super cycle. And so just look at this. If we're in a secular commodity bull, gold is going to be one of the last things that runs up a wall, and it'll be the last canary in the coal mine. So it's going to take many years. This is not a trade that's going to happen and play out in the next few years. It's going to take a long time.
Well, the last time we were in a tightening cycle, gold broke before grains.
Yeah, gold will. Gold will see it coming, and it'll start running up. Like for instance, this year, if we can see the pivot coming or expectations of Federal Reserve pivot coming, you'll see gold really start moving, and that'll be the sign that we're setting up for the next run in this bull market. And so for gold to be at new
I think we
price,
are now. And we're only one more high away in the Dixie to support it.
So. That wouldn't surprise me. Imagine if we go into a dollar bear market for, those things can last a decade plus.
Yes.
And so you have a situation where dollar's been pretty strong relatively versus other currencies, but what happens when it goes into a secular bear? You'll have gold, new nominal price highs in gold every week. It'll be a normal thing.
Yeah.
And the more that happens,
you've never heard me say this before. And with all the negativity, there's still a lot of gold bulls out there. I mean, sentiment's still over 60%, but you never heard me say during our interview, don't wait to buy gold and wait. That's what I'm doing.
Yeah, I think you were right last time we spoke 6 months ago. The delay. You were definitely right in that call. And this final chart is a chart that I use just to remind people how silver has operated over the last 52 years or so. The blue line is essentially silver, how it trades outside of the Western trading hours. The red line is the spot price for silver, and then the black line is the New York COMEX price for silver intraday. Basically how the price of silver trades during COMEX trading hours. So if you can if you study this chart, you'll see that eventually the red and blue line, they do converge. And you can look in the 2000s during silver's bull market in the 2000s, where the spot and blue line had caught up in 2006 through the run in 2008. Then you had the global financial crisis, a divergence between the blue and red line. But then by 2011, the red and blue line touched each other again in that bull market for silver that ran up to 50 in April of 2011. So that red and blue line, now the divergence between them is almost tenfold. It's more than tenfold, right? So you have a situation where my thesis is that, by the time this red and blue line converge, you're going to be looking at a price of silver near triple digits. And that'll be more or less the time to be taking profits, moving out, and some of your position into other things. But this has the potential, if things go real wrong and with confidence in the currencies, that this thing can get really stupid to the upside as well. So at some point, this has to go on an exponential phase because of all the stuff that we've done to the system. And so as bad as it's been for silver in the last 11, 12 years, essentially, is as crazy as it could be in the next 12. So I still hold and maintain that this is going to go stupid as badly as it seems it's been for the last 12 years. It can get as nice and as crazy as it can be on the other side as well. So it's just one of those things that you buy it and you hold it and you just forget about it. You don't look at the price every day. If you're doing trades on a short, medium term basis, good luck to you, because it's a difficult market to trade in a short term basis. But on the long term, I think a prudent position in bullion it totally makes sense because of the limited downside risk in holding bullion versus the upside to come in terms of wealth preservation and even wealth appreciation.
All right. So best way for people that may have questions about, hedging and owning and storing physical and any other way that I believe you're a big believer in holding the physical.
Yeah, whether or not it's in your own domicile in a private way, you can do that. That's what a lot of people do if they have a small position. But if you get to a larger position of 6, 7 figures, which we have many clients that do that,
Yeah.
you can also, go directly and have a direct account for storage with Loomis or Brinks or G4S, something along those lines. So it's very common for people to have a combination of a little bit at home and then a lot in private, depositories that are looked over by secure logistics professionals. Right. And
Right.
so, yeah, that is an option. And, we had mentioned earlier, I do a channel on YouTube, SD Bullion. Every week I do a bullion market update. So if people want to see, updates regularly on what's going on in the precious metals market and in markets in general, I do roughly a 10-15 minute weekly recap on Friday evenings that I publish there. So it's free. You can go check that out if you'd like. And yeah, sdbullion.com, that is the website.
Okay. James Henry Anderson, someone you could go to and have your questions asked if you believe that you need to have something before these CBDCs hit the street. So, thanks for keeping us abreast of that situation, James. And, you don't sound as like near-term bullish as I've heard you before. So I think that you will be in the next month. Once this dollar turns, James, it's game on.
We'll look forward to it, Dale. And people can also reach me on Twitter. The handle's at James Henry and you can just send me a tweet directly there as well. It's an easy way to
follow James on Twitter at the minimum. So so that you have any physical or precious metal questions, James will give you straight answers. And appreciate your time again, James.
Sure thing, Dale. It's always good hanging out with you guys, and hopefully we get to talk again soon.
All right, we will. I'll talk to you, James. Everyone, James Henry Anderson. Follow him on Twitter at James Henry and hope you guys have a good turnaround Tuesday. And I hope oil cracks. And for the rest of you, remember, don't just count your pips, count your blessings. You could be with the team on the morning edge in 9 minutes. So, we are living in interesting times. All right. So, adios, everyone. Have a great trading day. See ya. And thanks again, James.
Thank you.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.